Okay, I'm very excited to have on the Goldstein on Gelt Show my good friend Linda P. Jones, who I know from the Money Tree Investing podcast, where she and I sit on the panel there. But more famously, she is the host of the podcast called Be Wealthy and Smart, where she talks about all sorts of great techniques. She was in the financial industry for over 25 years, much like me. And in fact, by investing, she became a multi-millionaire at age 39. Linda, real pleasure to have you.
Thanks, Doug. It's great to be here. Fun to be on your show.
It is fun. It's fun to talk in a different format. So one of the things that I actually think is interesting about people who are very successful is that they are not always the people cutting coupons. So what's your opinion of frugality? And do you think living frugally is a wealthy habit, or is there maybe another way to get to be wealthy?
Well, this is one of my favorite things to talk about because I think people can focus too much on frugality. I like to say you can't just cut spending or you'll end up living in the woods. So you really can be careful with what you're spending. That's not a bad thing. But I think to think that frugality alone is going to create wealth is a myth. And what people need to realize is that, yes, they need to get some money together, but it's really going to be the investing and compounding that is going to create wealth for people, not simply saving money. But I do like to say you can have everything you want, buy it at the right price. That means do buy on sale, do look for samples or wholesale or other advantageous ways to save money, but just simply thinking that cutting expenses alone is going to lead you to wealth is, I think, a fallacy.
Yeah, I get that feeling a lot also. I feel that the amount of time that people spend looking for specials or trying to to move their credit card debt here or there, or get some great deal, if they would just spend that time improving themselves and their earning capacity or their investing, for example, they would do much better. But unfortunately, the penny pinchers always look at me kind of askance. Do you get that as well?
Yes, I do sometimes, but I like to point out that there's two main ways to wealth. One is by investing, and I like to say investing like billionaires. That's understanding that there are savvy ways to invest. And also to create a business. So to create extra income sources. That's something that a lot of financial experts don't really focus on when you turn on the TV, for example. They're not talking about how can you make extra money, what are the things you can do to bring in extra funds, but really that can help in the long run to build wealth too.
So what does it mean to the average person when you say, go ahead and create a business to bring in more money? How does someone even think along those lines who's not an entrepreneur himself?
Well, nowadays, I think entrepreneurism is a learned habit. It's something that there's so much information online that you can go on and learn about. There's different things that you can do. There are people that are becoming Uber drivers that are making extra money on the side. There's people that are working for a company called TaskRabbit where you can run errands for people and get paid in your spare time. There's people that have started online affiliate marketing businesses. So, for example, if you sign up with Amazon Associates and you put out information about how to buy a certain book and people buy it through your link to Amazon, not only do you get paid commission on that book, but also on everything else that they buy at Amazon. So a lot of people are doing side businesses, online businesses, things through their computer that you just really need a computer for, and you can actually become an entrepreneur now.
So one of my concerns about that is that there are people online who are constantly telling you how you can make money online, and you watch a lot of people try and fail. And I'll tell you, even myself, I've found that my core business, which is helping people who live in Israel manage their U.S. investment accounts, that business, thank God, is doing fine. And I spend all day doing that, and I've got a whole team of people that work with me on that. But from time to time, I've written books or I've set up online courses, and I don't have as much time to put into this, and therefore, they're not terribly profitable. And I think that happens a lot. So it seems to me, and I'm just kind of challenging your advice here, that maybe people have to be aware that it's not so easy. Just throw up a website and sell stuff, because you got to get 1 million people to come to your website. No.
I agree. It's not that easy, but it is possible, and it is something that over time people have been able to learn and make quite a bit of money from. So it's not just, put up something and people will come, see it, and click on it or buy it. A lot of times it's what we call more of a funnel situation where you're giving away a free course, for example, or you're giving away some free information, and at the end of the information, then you invite them to buy your ebook, or you invite them to buy your course, or you invite them to buy this link to books or whatever it is that you've been talking about. Maybe you do a book report on different books, and then at the end you have the link to Amazon. So there has to be a component where you're offering free content and allowing people to come in and get something, and through that law of reciprocity, then people will typically want to buy.
We're talking with Linda P. Jones, who is the host of the Be Wealthy and Smart podcast, a podcast which I listen to. I am a podcast consumer, but I'm very, very particular. This is in fact one of my favorites. She's been talking to us about whether you should cut spending in order to become rich, and it seems that she's not a big fan of that, though she's not against cutting spending, and also about the possibility of earning more money by perhaps creating a business on the side. But Linda, I want to touch on something else you said, which was, you said you should think like a billionaire. So most people say, I'd be happy to be a millionaire. What's the difference between how millionaires and billionaires think and that we can learn from?
Well, I like to watch how billionaires invest. I'm very interested in what they do. And typically they are fans of following cycles. This is something that goes back to JP Morgan. It goes back to a lot of very wealthy people have followed business cycles, have followed investment cycles and trends. And I like to say that money moves in cycles and peaks in bubbles. And you can see that in the real estate trends, in the internet investing trends, technology bubble. You can see that there were times where there were cycles where that was a very lucrative place to invest, and then it peaked in a bubble and money moved on to the next place. So billionaires really watch how money moves, and I think that's a really smart thing to do.
So let's talk about bubbles a little bit, because it always seems that after a bubble bursts, then everyone is pretty smart. Oh yeah, look. And there's always some guy who happened to have called it beforehand, and then he gets to write a lot of books and go on the lecture circuit saying how he knew it was going to happen. But how can you identify that there is a bubble as opposed to just, well, this segment of the market grew for a while because it was perhaps undervalued and now it's more fairly valued?
Well, there is anecdotal evidence that you can follow. For example, during the tech bubble, I remember the FedEx gentleman one day delivered a box to my door, and just out of the blue, I never saw this man before, didn't know him, and he said, "Hi, how are you?" And I said, "Fine, how are you?" And he said, "I'm great because Cisco went down today and I can go buy some more shares." I thought, that's a pretty strange conversation to have with somebody that just stopped by my door. But it happened not only with him, but it happened when I was driving a car service. That gentleman was telling me how he was buying biotech stocks. And when I'd go to parties, I'd hear people talking about how much money they were making with stocks or how they were quitting their job and trading stocks. Those are all signs of the peak of a bubble. And this goes back to John F. Kennedy's father, who during the peak of the 1929 bubble went and had his shoe shined by a shoe shine boy, and the shoe shine boy gave him a stock tip, and JFK's father went and sold all of his stocks and said, if the shoe shine boy is giving me stock tips, then everybody's in the market that can be in the market and I need to get out. So I kind of used that anecdotal evidence. It worked for me with real estate. It helped me determine when to sell my primary residence in 2007 in Seattle, and I used
So now you're homeless? Is that what you're saying?
No, I moved to California we had a second home, and I moved to that home and made that my primary residence. But it can help when you pay attention to cycles. It can help you with timing certain events in your own life. If I hadn't wanted to sell, I probably wouldn't have sold, but I was ready to, but I was looking for the right time, and it seemed like it was getting close to a peak because everybody was talking about real estate prices. There were websites with people flipping condos and didn't even walk into them. They would just buy them online and then flip them to somebody else. Those are all signs of the peak of a bubble.
So the opposite of that is looking at something that has a real value in it, meaning it's not that it's just gone up because you're hoping some sucker is going to buy it after you do, but that something actually maybe is really doing well. How can you identify an investment that really has real value in it?
You can identify an investment that has value by following trends and seeing what is actually trending well. And typically, I like to invest in stocks, for example, that have rising earnings at a rising rate. So companies that are getting more profitable, those are good companies to invest in. One of the reasons we saw Apple fall recently and lose $47 billion of value is because it missed its earnings number. So a lot of managers don't want to own it anymore. So you really have to be conscious as an investor about who is profitable and who is gaining profitability.
All right, that is one tool to learn value. Linda, I know that you teach a lot about how to invest on Be Wealthy and Smart. We are just about out of time today, but in the last few seconds, just tell people how can they follow you and follow your work?
They can follow me by following the Be Wealthy and Smart podcast on iTunes or Stitcher Radio if you have an Android device, or going to my website, bewealthyandsmart.com.
Okay, and we will put links to that at the show notes of today's show at goldsteinongelt.com. Linda P. Jones, thanks so much.
Thanks, Doug.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.